Pleased to have you back here on the Grap Coin YouTube channel for yet another SEI update video. The SEI chart shows that the price has failed to climb in 5 waves, which led to the breaking of the critical support level, which was probably 58 cents. In the course of today's live show, I did in fact update the SEI chart. My best guess is that this chart is actually following a 5-wave pattern, not a 3-wave one. Well, so it's unfortunate that the rally fell apart after 3, but that's the reality. It's a shame because the chart started off great. Altcoins are problematic because, well, they're all bad. Everything is fine and dandy as long as they remain joined, but they inevitably and unfortunately fall apart. They turn into ABC structures due to their severe uncertainty and lack of value. So even though it doesn't look good anymore, that's the best I can say on this chart. It might still manifest as a wave at sea, and things could become interesting again if the first two happen. Nevertheless, we possess an ABC where the C wave reaches its climax at 1.4 at a notable C wave aim. The 1.236 and 1.38 extensions are significant for a C wave, and we normally claim that it begins at 100% extension level. It is understandable that this was not powerful enough to warrant a greater third, considering the massive decline and its history of reaction to the 38.2% retracement of the entire distance. This means that, hypothetically speaking, we can. Without a doubt, let's look into the possibility that it's forming a larger ABC structure. The bull market is far from over. Generally speaking, Bitcoin's positive support is intact. Whether or not the market is experiencing a bull market is not necessarily dictated by altcoins. Bitcoin is fulfilling that task. Even now, Bitcoin is unrivaled. Yes, they will all crash when Bitcoin announces the end of the bull market, but altcoins are really tanking right now. A small adjustment has been made to Bitcoin. Nevertheless, given the persistently positive market sentiment, in my opinion, these coins should be allowed to rise in price in a bullish trend. This suggests that the current retreat is a B wave, as the February peak ABC structure is changing into a larger ABC on this chart. Under the ABC flat shape, which still has some wiggle space, the next support level then will be at 41.7 cents. This is how the price has reacted previously. As for the 3 pennies beneath that, I have 31, 23, and 15.8. We still need to see a reaction at this level, which is roughly the yellow support zone, not that I'm recommending a decline to 15.8 cents. A small reversal is shown on the 4-hour chart. This candlestick rises over its earlier peak, suggesting that 57.5 cents may have been a recent bottom. It would be perfect, though, if the price could break over 75 cents, the most recent significant swing high. In addition, I do not have a reliable microstructure, especially in these rapid sales. Sometimes you might not notice the final, 4 or 5 patterns, just saying, okay, this could be a 1, 2, and then the 1, 2, 3 would be the existing technique. Thus, 3, 4, or 5 might basically describe this. To get an additional 4 or 5 patterns, possibly 2 further low points. Okay, so you need to time the 3-wave retreat and the first upward surge perfectly. Subsequently, a low is reached and the resistance is broken. At the moment, I am perplexed since we have witnessed these potent candles. Every once in a while, we might miss the most recent low when we're riding these powerful candles. Let's call them liquidation candles. Yes, occasionally we fail to notice it because the pace of life is so fast that it has already been ensconced within that crimson torch. My position is that we need to keep an open mind. A small decline is still possible. Perhaps reaching 41.7%, it has definitely done its job, but you should only look at that once more or at the 31.4% level. Now it's possible to change its direction, but it basically has to see the first one up first. Furthermore, this C wave, what would be the possible outcome if it rose? I take it that the 2 main considerations are risk and return. It is highly improbable that prices will go below the 15.8 cent level, which serves as vital support. From here, it ought to take us to 450. I paid $4.50. 0 is the current risk-reward analysis reasonable? Yes, I think so. Wow, that's fascinating, isn't it? As long as a confirmed low isn't in place, you should exercise caution while sizing your positions. Although waiting for the first one to form in wave C is obviously the best course of action, you can always check to see whether the market has bottomed out by setting your stop loss below the previous swing low. Do not forget that this would occur in 5 distinct waves, the first of which may be the C wave, which would indicate that we had actually hit rock bottom. Yes, in addition, you could hold off on making a move until the first sign of trouble appears, which could be a breakthrough above this trend line. My update is this. I hope you enjoyed reading it. Revision, like, comment, and subscribe if that's the case. Your attention to the Grapcoin channel on YouTube is much appreciated. So long.